Yeah, so good evening to all. I'm very happy to resume the Alumni Meet series. So we are on the 23rd talk, and we are going to have another very interesting, extraordinary person, Balakrishnan, or very fondly called as Balki, in his batch, the 2014 graduate batch. And the talk, as you see from the abstract, is something connected not directly with a kind of a career pursuit, but something beyond that. So that means this Alumni G Meet series is not only for developing one's career, but it is also in a holistic way of the alumni nurturing the current students and as a Shastra community as a whole. So I am very eagerly awaiting. I'm not going to stand between you and Balki. You have already read the abstract. He is pursuing his PhD at South Korea, and but the talk of today is something to do with stocking, and probably he will give very valuable inputs of how you can start early investment to become rich, probably like Balki. So thank you, Balki, for accepting this talk and coming forward to share on a very interesting topic to all of us. And over to you.
Yeah. Hello.
Yeah, you are audible.
Yeah. So hello. Hi. So can you all hear me?
Yeah, you are
Mhm.
audible, Balki.
Loud and clear, sir.
Yeah. Oh,
Go ahead.
loud and clear. Okay. So hello all. So myself Balki. So I am from 2014 batch, proud 2014 batch. So I'm so much excited and then so much I'm feeling so nervous to talk in front of like 60 plus people because it's Sunday and everybody will be having some very good plans and you happen to spend your time, valuable time for me for this presentation. So I'll be very much elated to invite you all here. So thank you. And I'm also seeing my very good, so much of my friends here after a very long time. So thanks for joining people. So let's do some stocking. Hope you all can see my presentation right now.
Yes,
Yes, yes.
Yeah. Okay.
yes, yeah.
So let's do
So
some stocking.
just a request, just a minute, yeah, Balki, just a request. So all others can just mute your microphone so that it is okay. And if you have any questions, you can just put it on the chat and that will be taken up by Balki at the end of the talk. So please mute your microphone. Yeah, Balki, you can continue.
So okay. So let me begin again. So let's start. So the topic which I chose is let's do stocking. So I put it like let's do stocking, and then I hyphen. I mean I just cut an AL instead of OC. So why? Because is that the first word actually inspired me for the second one. So as a guy or like as an what to say, a teenager and then adolescent. So I mean I like stalking so much. So I did too. So as a continuation of it, at some point of time, it led to me for like zero value wasting of time and money. So at some point, I thought like, okay, why should I waste money? So I have a very good phone. So I have a very good laptop or like I have very good electronic gadgets, but I'm not making out any money out of it. So what are the opportunities I can do to make money? So there is a word like you become success when you can earn money when you sleep also. So I wanted to try that. So then I surfed many internet. I did a search for many jobs which I can do online, but nothing was very good. But I knew about stocking or I heard of stocking, but I don't have anyone who can mentor me or guide me how to do stocking or like what are the needs or what are the do's and don'ts. Nothing like that. Everybody told it's business. It's something which rich people has to do or like something like that. When you have so much money to waste or when you have so much money to dump, then you can go for stock. So when I discussed the same with my father told, why do you waste money on stocks? Why don't you put it in a bank? You will get a very regular interest rates. And stock is like something you put it or dump it in a dustbin. It's something like that. So then that made me think, okay, I should try this. So let's see what is happening. But at that point, I was not having any money with me in my hand. So then I was like started pursuing my career as I joined PhD here. Now after joining PhD, I just started getting some stipend, and I happened to get some money in my hand. Then I thought, okay, it's my money right now, so I have some money, so let me try it. So if it fails or if it is comes, both are for me, but it's not going to affect somebody who is related to me. So let's start. So that's how I started this talking. So to begin with, hello, myself Balki. So I'm here to present you all because I love boring people by presentations, and also to make you a little bit aware of stock markets. So what is stock markets and how it's working and why you should go for a stock market investment, etc. So you can find me in Instagram. So I'm quite active in Instagram than Facebook or other media. So this is my Instagram ID. So without talking much, so let's go on and start the business. So before we started, so I would like to ask, like, how many of you are like really worried about stocking? So how many of you think that stock market will make you lose? So if you think I am afraid, then you can put a yes in your chat box. And if you are like not afraid, then you can put a no in chat box. So I just would like to gauge like how much of you people are like really scared about investing in a stock market so that I can check in the hangout session. So let's do and start with the stock market business. So I hope you all knew about this old man. So he is one of the richest of rich fellow. So his name is Warren Buffett, and then he is like his famous quote is like, "I always knew I was going to be rich. I don't think I ever doubted it for a minute." So recently, the coronavirus pandemic hit everybody, and everybody was losing and not having any salary or money, or like people are going crazy. But still, there are some people who are rich and they were rich and they are rich and they will be rich for another few decades or centuries even. So one such fellow is this Warren Buffett. So he was like became famous or like he became super rich because of this investing. So how did Warren become rich? Maybe he's God chosen child? No, I think many of our Indian parents do a lot of temple going and then we do a lot of pujas. So we must be more of God chosen child than him. Like he studied a lot, not really, but because many others are like doctor students and postdoctors, and there are many other field experts, and there are many who studied a lot and lots and lot than him. Is he a CEO of Fortune 500 company? Even that's not also true because many Fortune 500 companies, we don't know much of their CEO's name or their owner's name. Even the Pepsi or Coca-Cola, it's being sold everywhere, almost everywhere. So let's say Coca-Cola is a $50, $5 per bottle company. But what about Boeing or Airbus? So it is they are selling the planes. Even their owners are also not super rich. They are also like not even the richest of rich even. So let us take Ambani also. Ambani runs a conglomerate of so much of companies like petrochemical industry, starting from telecom to petro, and then many. And Ratan Tata starts from a small salt until the Jaguar company, car making company, and even aerospace also. But they didn't become much rich like Warren Buffett. So that is something different about Warren. So this difference in Buffett is that he started investing in very early age. Around before his age of 13, he started investing, and still he is now 80 plus, and still he's investing money in many companies. So that's how he became so super rich. So I would like to share his experience, or like what kind of track or what kind of pathway he followed. So he became super rich. So I'm not saying that you have to be rich monetarily, but this kind of stock investment can make you or act like an auxiliary power to your financial status, because you should not depend only on one source of income. You should always have some backup system when something fails. Like this corona situation, there are many companies which shut down. So at that point, your salary is completely stopped. But if you had already some investments, or if you had some investments already in like stock markets or real estate or house rents, then you could have already have some little money of backup for you to earn. So let's begin with stock market. So this is every line here is like completely told by my perceptions, and it's based on my experience only, and there is no I'm not going to put any definitions or something like that. So this is everything is my learning, and so I just wanted to make it as simple as possible, because most of the people here who are watching are like just new as like a kid who is just started to read ABC. Okay, so I would like to make it as simple as possible. So stock market, in my opinion, stock market is like investing money on people's idea and harvesting its outcomes. So when we say ideas, let's say let's talk about Elon Musk. So he had an idea of sending rockets to the moon or people to the Mars. So he had an idea, but he didn't have money. So people are invested on his idea, and now SpaceX is sending so much of rockets to the space, and now the people who invested in the Tesla stocks are earning it back. So that's how stock market works. So people are already having so much of ideas, and they just lack in some financial aid. So at that point only the stock market helps them. So let's say a guy is there. Let's say like someone like Elon Musk, but he is in India. So he wants to join. He wants to start a mobile project named Avocado. When there is Apple that is so much famous, why should not be some avocado? So let him start a competing plan with let him be a competitor of Apple. So he's trying to start a mobile company in the name of Avocado. So he has an idea. So he wants to deliver these mobile phones to many people as possible. So first thing he will approach is his father or his individual investment to start. So individual investment is like your own investment or like your own money which you have it in your pocket or in the bank accounts. So first, he is young, so he must not be so rich. So he may be asking his father, I want some money. I am going to start some mobile company in the name of Avocado. Usually these guys are like from the last bench, so his father won't, most 99.99% won't be trusting him. So he will say, "Hut, I won't give you any money." So then he should have been disappointed. Then he will put his idea on and apply for a bank loan or angel investor. So angel investors are nothing new. I think in the recent Surya Reporter movie, they also showed something like that. So the Surya used to have an idea of starting an airline company, and he will approach some investors, and they will be like kind of asking him PPT and his project proposal. So such is like this angel investors. So in angel investors, uh, it's like unknown person will be investing on your ideas, and they will get the profit from. If you get the profit, they will also share your profits like that. So this works up to like medium scale level. So when you want to with the initial investment, you can make like say 10 mobile phones. With the angel investors and bank loans, you can make few thousands of mobile phones. But if you want to develop it into a multinational company, and if you want to grow it further, then you make the company public, and then you ask for the public money for the funding. So that is called going public. So that's how Facebook. Initially, it was like in the having investors, and then it went public. Now it has grown tremendously. Facebook is laying some cables across Atlantic and Pacific oceans for themselves to just gain the internet access. So that's how big they become because of this public investments. So that is the best part of stocking. So how stock market works? First, let's say your company is like this kind of coffee bean farm or like tea farm. So the company will be having its products or the stocks. So that is like a coffee beans, or this coffee bean can be considered like a stocks, which is the output, or like it is the value of that company. So it is sold in the form of coffee bean. It is like the stocks. And there is you. So you like coffee. So you always wanted to buy coffee. So you always like coffee and you will always buy coffee. But you won't directly approach the firm for the coffee. So you just go for a middleman who is like Amazon or some other middleman, or like some kind of coffee market, and you approach them for coffee. But that coffee market would have already bought the coffee beans from the farm for some price, let's say $8 per kg. So if they already bought $8 per kg of coffee bean, and they will sell it to you for $10 per kg. So this is the sale price. $8 is the sale price of any stock, and the buy price is the buy at the price which you buy from the market. So that is $10. So there are some times that the coffee bean rate might not be like compromisable or like appreciable. So at that point, in last monsoon, some I mean, in some farmers in the region of South India were kind of hiding the onions to increase the price of the onion. That is like kind of buyback thing. So it is like they already would have grown some 30 kgs of onion, but they say that only 10 kg of onions are grown, and they like kind of virtually increase the demand, and then they increase the price and then they sell. So like that in stock market also they do. So for that, they buy back your stocks. So the investor will buy back your stock for say $11, and they will sell it back to the company for $13. So in between there is a commission that is $2 which goes for the company, and you, if your stock price value is like, let's say you are having a coffee bean, and your coffee bean per kg rises from $10 to $12 within 3 months, then you are like grown. But if your coffee bean price fallen down from $10 to $6, then it's really sad. So I think then that's how the stock market also works. So you buy a stock, and you buy it at some value. After a few months it gains value, then it's good. If it after a few months if it is losing value, then it is bad. So this is the basic principle of stock market working. So this is how a normal stock market looks like. So when you open some stock market index or like something, so this Nifty 500 is something belong to India. So Nifty 500 is like some top 500 companies cumulatively together, and how its values are like gauged or like it's calculated and it's complex. So for the top 500 company, how they are performing, and based on that, they have put a stock. So that value is given here. So here we can see that in the x-axis there is timeline, and in the y-axis there is the market price. So we are here right now in the timeline at the right hand corner. So before, so here it is from 2019 to date. So in the 2019, we were just enjoying very good like Halloween, and then we were celebrating playing cricket, and we all were like enjoying so much. So that point, almost the stock prices were like almost like kind of flat, and it was just occasionally increasing and decreasing and increasing and decreasing. But later in the month of after January, when WHO told that there is a new disease and it is spreading in the air, and you all have to like stay caution. So since then, the stock market started shrinking here. So from the month of say January, you can see that the stock market started to falling down. So at the end of March, when there was like complete shutdown of the Indian markets, so at that point, at the third month March, the stock market completely fell down to half the price. So this is called as a bearish market. So bearish market is something like when the price falls, then it is called bearish market. So after March until like May, people were like some skeptical whether the economy will be back or not, or how the people will be responding, and people were not having money, or like the economy was like simply in the frozen state. So that you can really see like at the bottom it was like kind of trailing. So then after like month of May, people started thinking, okay, anyway we are going to grow, and then the stock market prices again, people started investing, and then the prices started skyrocketing. And this market is called as the bullish market. So bullish market is something like when the prices go from 0 to 10, then it is bullish market. If the price goes from 10 to 0, then it is bearish market. So people started investing and the market started going bullish. So we are here right now on the top right. So right now the price is around 10,500 points. So a common man sees a stock market graph like in such a way, like a line graph, but usually the traders will be seeing this in other way. So for the traders, you usually see there is a kind of a red and green here. So this is called a candlestick model of same graph. So both the previous and this one are the same, but just that the here instead of line, it is made up of candlesticks. So let us zoom it and see what is this candlesticks. So here we can see it is like a proper candlestick with a thread in the top and the bottom. So here this candlestick is green in color, but sometimes it is in red color, and it has a wick or shadow in the top and bottoms, and then the body region in the center. So, but the body region means the price between opening and closing positions of any stock market. So, how this red color and green color is defined, and how the market can be predicted with this candlestick is can be. I'll try to explain it as much as simply as possible. So, let's begin with in the winter month. So right now it is winter and everybody is feeling cold and everywhere. So the market will be bullish. So let us go back to, I'm just trying to explain the bullish market. So let's go back to the same coffee bean theory. So in the month of winter, there will be a lot of, it is so cold and a lot of people will be like, would like to have a coffee or tea or something. So the coffee products will be like in a very high demand. That is, the number of people who would like to consume the coffee is like become very high. So, but at that point in the winter, the coffee production will be very less because of I mean, there is a lot of the supply will be very less because of the rain or because of the very natural calamities like storm or many other possibilities. There might be some what to say. There will be some reduced quantity or the reduced supply of the coffee bean. So let's say there is only 5 kg of coffee bean is available in the market, and there are 20 people to consume the same same coffee beans, then the price can be increased. Like the people will be ready to buy this coffee bean for more than 12 or $13 per kg also, because people need coffee. It is winter and they need coffee. So people will go for higher money. So at that point, in the right hand side, we can see that. So before start of the winter, the prices will be here. So after start of the winter, let's say it is in the before start, it is at $10, and it will start rising and rising, and it will reach $12 or $14. So at this point, at the end, at some point, it in the what to say in the middle of winter season, it might have reached even $16 per kg also. But at almost near the end of winter season, it might be reaching $14. So this is called the bullish market, and this is represented by the green candlestick. So high and lows are like the in between before the start and end. There might be some kind of crust and thrust. So that is represented by that wick at the top. There is a small string. So this is one bullish market. So there is other market. So so this is bullish market, but there is the other season, that is warm season, that is summer. So in summer season, not many people will be like would like to think or like would like to drink coffee. So they will go for Neermore. Neermore. I personally like Neermore in Shastra University. They used to keep near the temple. Me and Sai used to like often go in the month of May to drink almost say at least 2-3 tumblers of Neermore. So at that point, technically the coffee consumption becomes less because coffee is a hot beverage and not many people will go for coffee. So at that point in the summer, the due to good monsoon or like good harvest, there will be lot of supply of coffee bean. But the number of people who would like to consume that coffee will be like less. Let us say there will be like 10 kgs of coffee available in the market, but the number of people who would like to drink that coffee will be just 5 or 6. So at that point, you should give this 10 kgs of coffee bean to the 6 people. So at that point, the market price will be like getting reduced. So to attract these 6 people to buy maximum as possible. So initially it was like $14 here. That will be reduced, and then they will start giving discounts and discounts and discounts. The price will come to $8 per kg. So at this point, at the opening of summer season, it will be $14, and at the close of summer season, near the end of summer season, it will become $8. So this is called the bearish market. So in this bearish market, the price will start to shrink. So in my abstract, I promised you I'll tell you how this Vivo phone could become an iPhone. So many people were like, I think, would like that idea. And then they just wanted to see how a Vivo phone budget would become an iPhone. So they just wanted to, they are just curious maybe. So I'll tell you how it would have become in the past 6 months. So first, let us assume that you wanted to buy an Vivo phone for budget of say $200 to $220. That is approximately 14 to 18,000 rupees in Indian money. So I think this is an average phone buying budget phone buying price range. I mean, we used to invest for the mobile phones. So typically we buy between somewhere between 10,000 to 20,000. Let's say in an average 14,000 to 18,000 rupees. So you asked your father, and your father agreed to give you that much money, and you are about to buy, and you are about you are convinced to buy some new Vivo phone. So at that point, you are seeing a ad of iPhone that it has recently launched for a low price. That is iPhone SE. So then you think that iPhone has launched some cheaper model, I mean the low cost model. So why shouldn't we buy that? But its low cost model itself will cost you around say $30 to $35, 30 to 35,000 rupees in INR, I think, around $500 in USD. So you already have some only half of the money, that is $200 to $220. But all you like is you wanted to buy an iPhone SE. So then you thought, how can I make money, or how you can grow that $200 or $220? Let's take you have a $220. You can use this $220 to grow, and you can invest in an Apple stock market, and you could have actually grown it for the same buying an iPhone SE. Let's see how in real time it would have worked. So note here is that Apple iPhone was introduced in April month. So let's go to the link. Yeah. So this is a typical stock market graph I already showed you. So it is like a line graph starting with the timeline in the x-axis and then price of that stock value in the y-axis. So I will change to the traders view. So you can see that the same candlestick with the green and a red kind of candles happening here. I'll start with the month of April. So in the month of April, the Apple company introduced its iPhone SE. So in the month of April, you can see the price values are somewhere near $60 per share. So you already have $220 in your hand. So if you would have invested this $220 in Apple share itself, so you would have got one share for $60. So you would have ended up with almost 3.7 units of Apple stocks with you. Let's say in a round of four stocks. Okay. So you started investing in the month of April. So let's say 15th of April, and then you started. So at the end of say September, the stock market price went to 128 and $130. So at $130, it means that starting from $60 per share to $130 per share, that means the value has increased for almost 110, 120%. That means you invested $220 and it has doubled to become 440 and almost $480 in the real value between the April to September. So you started at April, then it means May, June, July, August, September. The fifth month start, that is in between only 4 months. If you would have waited for 4 months, you would have actually bought a better iPhone than a Vivo phone. So that's how the stock market works. So this is a real example, and this is a real Apple stock value. And right now, Apple stock value is somewhere between $118 per share. So by now, if you would have followed this kind of success rule, then you might have maybe bought an iPhone SE, and you might have been seeing me with an iPhone SE. So during my abstract, many people would have thought this meme, they would have came to their mind, like how I would have been saying how to grow money. I think like எப்படி சொல்றது like that. But it is though this meme is like funny, but still you can make real money out of real stocks. So this is not something what to say gamble or something. So it is real money, and you can really make it if you are like wise to how to invest, and if you know, or if you could learn how to invest and where to invest. So based on my studies, or like based on my experience, I would like to stack up few do's and don'ts in the stock market trade. So first thing, slow, steady, and boring wins the race. So this is like my gem of a line, because stock markets happen between 9 a.m. to 4 p.m. in the morning till evening. So it happens very slowly. It doesn't happen. When you see the price starts from 60 to 120, it took 4 months. So it is slow process. But this is very, very, very fast process in my experience, I would say. Because there are many stocks who go or reach the double value after 5 years or 10 years, or some takes even 50 years also. But it is a slow process. You have to wait. But if you wait, you will reap the best benefits out of it. Second, don't get confused by the market forecast. If you start studying so much of market forecast, like how the stock market will be today, how it will be tomorrow. So you should remember that you are just investing $100 or $200. Very simple. But there are very big whales are existing out there in the market who will be investing few millions and billions of dollars in the stock market. So they also want gains and losses. So at that point, they will be the market setters, and just so they will kind of what to say spread the rumors in the market, and they'll say today the market will grow, but it will happen the opposite side, and he will be getting benefited. So like that, don't get judged or don't get confused by the market forecast. It is always confusing. Longer the better. I know it means I think many people will have what to say have funny assumptions based on this term. Longer the better. Of course, it is a very good term, and it is very applicable for many, many, many things. So the longer you stay, it is better the outcomes will be. So it's better you stay longer. And then make your own analysis. So you should study for where to invest, how much to invest, and how much leverage to be invested. So you should make your own analysis, and you should trust your own analysis. It's okay to make some mistakes and learn. So then you can try started investing, and it's not like always you will get the profit. Sometimes you will end up in the loss, but it's always better to make your own analysis and don't listen to market tips. And no one gives it for free. Yes, when you start investing, you're trying to tend to search for like many market tips in the Google or even Instagram or Facebook, blah blah blah. So many people there will be many podcasts or many Instagram pages or many other things who will be saying, come on, invest here, invest that, this stock will grow, that stock will grow, and there will be a lot of free tips existing everywhere. But don't get confused with that. Just trust your instincts and go with just your instincts. You are the only responsible for your gain or loss. Yes. So when you are investing $100, it is your investment and your only your responsibility. If you gain it, it is yours. If you lose it, then also it is yours. It's only you and you are the only responsible person for any gain or losses. Then never keep all your laddus in the same box. So it is same like the old saying, never keep all your eggs in the same box. But personally, I'm vegetarian and I don't think even Shastra will also appreciate eggs. So I would say laddus. So never keep all your laddus in same box because if you keep all your laddus in the same box, then your brother or sister siblings might come and they'll just eat it. So it is better to keep two in like different boxes. So like that in investment stocks also, never invest completely in one stock. Try to split it and invest in many companies. So one company might fall, another company might increase. So that will help you to balance the profit or losses. So that's how it works. So finally, the control your emotions when trading. Yes, when you tend to trade, you kind of sometimes lose your money. Let's say you invested $10 and you lost. You invested $100 and you made a loss of $10. Then suddenly you will think like, whoa, I lost $10. I should get it back. Then you kind of what to say lose your cool and then you will start investing randomly or whichever the stock you see as a first glance. But that point, when you invest it, you are actually not studying it and you are just breaking its fundamentals. So there are more chances that you might again end up losing the money by wrong investment. So you should always control your emotions. So when you lost, you should say it's okay, all is fine, and then you should stay intact. And then you should wait for the best possible trade entry points, and then you should start investing. And that's all. So still, if you feel the stock market is risky, so why should you go ahead? First, I'll put some investment plans. In India, we basically think that banks are the best investment plans or like saving plans. So in banks, typically you get saving banks interest from 1.5 to 5 percentage. Depends on the bank and depends on the place and depends on the country too that you get in interest of 1.5 to 5 percentage. Typically here in South Korea, you get hardly 2 percentage of bank interest, I suppose. So there is other option also. You can say that I can invest in FD, fixed deposit, and it can give you a high percentage of interest. It can give you maximum of 3 to 6 percentage. That's it. But this 3 to 6 percentage, let's say you are having only 15,000 or 20,000 rupees in your account, because when you are in age of say 20 to 25, I think you will have an average of say 20 to 40,000 rupees in your bank account. That point, that is very low money, and for that you get very small interest, and the account maintenance fees will be quite higher and lump sum. And best of all, in banks, if you invest how much ever you have, at the point when banks going busted, you will get only 5 lakh rupees. So in recent in India, Lakshmi Vilas Bank fell down, and it was like almost kind of going to bankruptcy. So now the Reserve Bank has taken it under its control. So in such cases or scenarios, if the bank goes busted in overnight, all you will get is just 5 lakh maximum. But there is second option also, private loan, and which is very popularly called as Kandavati in Tamil. So people used to lend money for Kandavati for higher interest so that they'll get a high return. But thing is that in Kandavati you will get high return by Meetravati or Raketavati or many type of names you can say. This is Tamil term, and I don't know about the other language terms, so we call it as Meetravati and Raketavati in very funny term. So like that. So you get a high return of rate. But there are more possible that the Marimutu who asked you or who begged money from you would have been like dead before he repays. So when you approach him for money, he would have been already like dead, or he would have been already, what to say, not in a position for you to repay. So that money is lost. So if you say if you loaned some 10,000 rupees to him and he for a 1,000 rupees of interest for 3 months, then it's gone. If he is dead, he is gone. The money is gone. You can't ask for it. He can even become like Malaya and flee. So that's how even the banks lent to Malaya for his Kingfisher company. And what he did is just flee. So there is third option for the better option for the investment, in my perception, stocks. So stocks can give you very high rate of interest. So as I demonstrated, the Apple stock gave you 100%, more than 100% of return within just 4 months of investment. So like that, if you do the right investment on the right stock at right time, then you can get very good return. Also, stock market crashes once in a century. Yes. So it's only once in a century the stock market crash. So now we have a very good opportunity that the stock market has already crashed, and it won't be. Let us assume that it won't crash for another century. Since we will live for another say 40 or 50 years, I think we have even our next generation and even next but one generation can also reap the benefit out of stock market by just investing on them before it goes for another crash. So I feel stock market investment will be wise. So win or lose in stock market, it is only dependent on you. Unlike in Kandavadi, when people can die or anything can happen, here win or lose is only upon based upon your decision. Then, how much investment in the last? I should be like telling how much did I invest in the last month. So last month, you can see the timestamp also in the month of November 6th, I invested around $150 in Apple stock. So within 2 days, I happened to get a profit of $12, and the stock value was like around 118.73. So there was only $2. Here we can see that there are many things are happening. So this is the real value of stock price currently. So in a day, the stock price has fallen down for $0.34. So this is the amount I invested. I invested around 6.4 units, that means 6.4 stocks. So I opened at a stock value of 160. So that reaped me a gain of $12. So within almost say 3-4 days, I got this $12. So here, this is stop loss. So stop loss is that if the price keeps on falling, I should get at least $6 and I will take out that I'll sell back the stock to the trader itself. So here there is called leverage 5. So leverage 5 is like virtually you are developing 5 times of money or like 10 times. Leverage 5 is like 5 times and leverage 10 is like 10 times. That is like I am buying this stock for 115 to 5 times of money. So it is kind of a virtual. Then this is the take profit. So this take profit limit is like once it reaches $40, I will say, okay, this is enough of profit for me. I'll take out the stock because it is based on few calculations that beyond that $40, it won't grow. It will become stagnant or the bubble will become peak. So then it has to fall down. So this will be the maximum profit I can reap out of it. So I'll put like maximum take profit will be $40. So this is the rate corresponding to that. So that's how you invest in a stock market. So this is how the investing paid interface will be like typically looking like. The interface will be like changing depending upon the company to company. So when you talk about stock markets, there are various stock markets, popular stock markets existing throughout the world, and we are in the India, and nearby is the Bombay Stock Exchange. There's a Tokyo, Australia. So Australian Stock Exchange starts first, then followed by Tokyo, then followed by India and goes to Johannesburg, France, London, and finally New York Stock Exchange. Typically, I used to invest in New York Stock Exchange. That is, Apple belongs to New York Stock Exchange. So when it was like 11:30 in the night, it will be morning 9 a.m. in the New York. So like that, I used to invest. So it is like perfectly synced with my sleeping time. So when I'm sleeping, I'll be earning. So when I wake up in the next morning, sometimes I end up seeing profit and sometimes I end up seeing losses. So that's good. Still, I'm earning when I'm sleeping. So investment part. Let's talk about how much can we invest. So let us say let's start with your Vivo phone money of 14,000 rupees to 18,000 rupees. That is typically $200. Let's put an optimum. Let's say let's be optimistic. Let us take a profit of $10 per week. So that will make you have 4 to 5 weeks a month. So you typically make as to make just $30. Some weeks you may end up with very less profit, and some week you might end up with losses also. So for that compensation, on an average, you make $30 per month. So you will end up with $250 by the end of this year. That is 25% interest. So every bank will give you just 5% interest per annum, but this is 25% per quarter or per month. So I'm saying almost 10 times or 5 times more of interest. So you get $250 by the start of this month, start of New Year, and then by the end of, let's say you begin at 2020, and then by 2021 December, you end up with $250, and then plus a profit of $300. That is totally $550 you would have gained. And by 2025, you would have gained almost $1,500. That is 700% of money you invested. And for retirement at the age of 60, you please calculate yourself. I think you will end up with more sum of money. So, so this is my talk, and let us review some default chart types. So first one is the bar chart. So bar chart typically looks like a simple line with a high value and close. This is the opening value, close value with the high and low values in a day or in a week or in a month. So this is a very default type of bar chart. People earlier before the computers, they used to manually do it. So that time this bar chart were like very useful for them. When computer and graphs started popping up, people moved to line charts like this. So this will be saying that the line will be showing the price starting from the bottom to the top, and then it will be like moving and up and down. So typically you see this kind of image. But investors and market people usually use this candle charts. So candle chart is something like a bar chart, but it is like bulgy like me. So it has a body portion, but it has some color also like red color, green color, or contrast color like black and white. So candlesticks are just invented by Japanese for easier understanding. They are simply like bar charts, and then the time period of opening and closing will be like mentioned here. And also it can be colored in two upward or downward price. So when the market goes up, then it is green color, and then if market goes down, it is red in color. So here are some Indian markets and global markets. So when you wanted to start investing, you can approach these websites. So you can see here in Indian markets, the initial starting price starts from rupees 5, 15, free, 3 paise, 20 rupees, 10 rupees, like that. And these are some kind of third party, and sometimes banks also like HDFC Securities, ICICI, So sometimes even your bank also will give you options to invest in stocks. So you can approach your banks also to how to invest in stock, and you can ask your bank's help also in which stock you want to invest and what are the stocks available with them through which you can invest. So like that also you can approach. In global market, so Indian market is like when you want to invest in Reliance or like Adani Group or like Dabur and then all these Indian brands, you go for Indian markets. When you want to go for say Apple or Tesla or Mercedes, Daimler, or let us say some Baskin Robbins, even Domino's also has public stocks. So if you want to invest on that, then you can go for global market trading sites. So personally, I use eToro, uh, the eToro which is here. I use this, and the interface which I showed also belongs to that. So here also the minimum amount will change and vary, and then the commissions also will sometimes change it depending upon the companies or the investment brokers. So that's with this I end my talk, and thank you all for listening patiently. Hope I convinced you that you can also make money with the stocks, and hope I didn't afraid you much. So you can reach me in my using my email ID or using my Instagram. So if it is any something professional or like something should be like serious issue, you can ask me email. If it is just a normal chat, you can approach me via Insta. Thank you.
Yeah, Balki, that's fantastic. Nice.
So back to the screen with Professor Naren sir. Yeah.
Yeah, so I would ask the participants, so that's nice. So you took it in a very slow fashion, very patiently, starting from background of what and why. So I would
Thank you, sir.
appreciate. So
Thank you.
first you made sure why you want to, they have to invest, and then the process, and then you also showed your part of what you are actually doing. So it is not just professing, but you are practicing. You showed. So that is very nice, right?
Yes, sir. Yes. Yes, sir. So when
Good. So
somebody has to believe, we
there's a
have to be
scientific
practically doing
analysis
it.
of, yeah.
Mm. We have to demonstrate our success. Then only people will follow us.
Yeah, fantastic. So that is what I said. There is a very scientific analysis of stock market by Balki. Right. So that's nice. Okay. So I
Thank you.
would ask people, you can unmute and ask if you want, or otherwise you can post it in the chat so that Balki will answer. Yeah.
Actually, I would like to thank all the audience because I thought when we started it was around 62 people, but now still the 60 people are there. Hence, I think I
Yeah.
didn't bore many of them because I was worried that
So there
after
are
lunchtime
questions.
many will be sleeping.
Yeah. So
Yeah,
there are
okay, I'll go
questions
for the
coming
question.
up. You can see the chat and then start answering.
Yeah,
So you can
Haina,
read the
could you
question
submit?
and the
Yeah,
name
yes.
and then
So
start answering.
I'll start with Rajeshri R. So, Haina, it's
Yeah.
very informative and gained a lot of insight about investing. Thanks. Now, I have a small doubt. How many months or years should we wait to get a reasonable profit? Okay. So, the longer you wait, it is better. So, it is not like very stipulated time because in your bank, you typically wait for 1 year for your investment return. Let's say if you are having 10,000 rupees in your bank, they credit you in interest rate only once in a year. So you typically wait for 1 year. When you can wait 1 year for bank, why can't you wait for stock market also grow for 1 year? Um, Sometimes the stock you have to like keep on checking. So some stock will reap you the benefit of 100% within 3 months. Also, some benefits will reap in say 6 months or even takes years. So it depends on the stock and depends on which stock you invest in. So if you want more profit, you have to go for very volatile kind of stocks, but that is very risky too. But if you want least risk, you have to wait for long time. Hope I explained her. Then I'll go for Vignesh Allah. There are a lot of apps where investment for stocks could be made. Some even ask us to predict whether the graph goes up or down and win lump money. Which would be the most reliable source if one wants? I would say don't go with that kind of gambling kind of apps because I would suggest it's better to go via your banks or go via NSE or via stock market broker. There are some ShareCon and Zerodha or some kind of reputed apps are there. So I think you can use that also because I don't know much about the Indian market because I started learning after coming here to Korea. And my friend actually suggested me this eToro. So for this global market, eToro is also good, and I would say I recommend that. But thing is that you should analyze, and it, maybe it's better to go via bank route because nowadays even CUB Bank also offers you stock market trading options. So I think it is better. I think every Sastra might have a CUB account, and you can use that via your online CUB bank. Thank you. So I have a question I would like to ask in microphone. Yes, Hariharan, please go ahead.
Hi Anna. You were also once a beginner, right? So did you directly invest into this market without you must have you've been scared if I'm going to lose money or not, right? So how did you take that risk? And one more question
Yeah,
is there like an duplicate software where you don't invest real money but you get that feel of the real investment, so that you could before you invest in reality, you have some practice and you get confident? Is a platform
yeah.
available?
Of course, of course. Every platform which you can invest will have a virtual account also. Let's say example the Zerodha or ShareCon or say I use eToro. So in that eToro also there is one like real account and then there is virtual account. In virtual account they provide you with $1 million virtual money. So with that
Okay.
1 million virtual money you can start practicing. And with that investment you can just start practicing. You have to put like okay, today I invest. Today you should learn from the say there are many books and there are many say YouTube videos and many people will be saying how the market is going to go and come, what are the analysis, how the market works. So with that you will learn and you will have to practice with a virtual account. In virtual account, if you make loss also, it's not a problem because you are in the learning process. But in real account, if you lost, it is loss. Okay, so it is better to take some good time and good confidence gain in a virtual money. Let us say you start with in virtual money, you start with say $100 or $1,000, and you could make say 10 percentage or 15 percentage profit also. Then it is good. Then you can confidently dive into the real market and start. But I would
Okay.
recommend better to start with the virtual market at least for 1 or 2 months. Learn properly, and then you start investing. Because if you start directly, you will be 99.99% sure your possibilities that you will lose the money. So start with virtual accounting and then go for real.
Yep. Thank you. And are these platforms paid, or how do we access an account to it?
Ah, okay. So most of these accounts, sometimes they will be having minimum money, like you can minimum invest a minimum of Indian rupees 100 or 1,000 or something like that.
Hmm.
So so with eToro, which I use,
Hmm.
in the first time when I want to invest, the minimum sum was like $200. So I
Okay.
started with the $200. So after that, I can invest as little as $50 also, but then $50 is minimum. And
Okay.
moreover, they give you a protection like I can't lose in the negative market. I mean, like I can't lose money below $50 or less than that. If it goes below $50, I directly can't invest in any stock. So that money is kept and I can take it fully. So minimum amount you should have maintained is $50. So like that. So this
Now,
is kind of safe also because sometimes you lose money and you will end up with zero money also. It's like a protection that instead of ending up zero money, at least you end up with $50 in the remind.
yeah. And no, my question was like,
Yeah.
if I want to log in into the platform, right? So for logging in itself, should I pay the platform for being a member in the platform?
No, 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 no. When you start investing real time, that time only you should have this minimum this thing.
Yeah. Okay.
Many will, I mean, most of them will be like giving you virtual account, right? So for that
Hmm.
virtual account, you don't need money. So they will
Okay.
say it's free and it is actually complimentary because they are kind of attracting you for their environment. So they give you like a compliment. This is virtual. You can try it and you can learn it. So you can learn in that. So when you
Mm-hmm.
start investing for first investment, they will have some basic baseline, like minimum threshold. So after that, when you invest and take profit, that time the threshold will become less. The more you gain, and the more the threshold become looser and
Oh,
looser.
okay. And
Thank you.
like, do
Hope
you
you
have
can.
will you have troubles like dealers calling and all telling you to invest on this, all that ads, all that stuff in this?
No, no, no. No, actually, personally, I use this eToro. In that, nobody calls me because only once I got a call from them for my verification of my house address, because you are trading real money, right? So you
Yep.
have to, you are like you are answerable to any government where you are there.
Mm-hmm.
So I was in Korea and I am an Indian citizen. So I gave my Indian account number, PAN card, my PAN number for my account.
Okay.
So I
Mm-hmm.
told them right now I'm in Korea, so I'm a NRI here. So they said, please show us your Korean resident address proof. So we will
Mm-hmm.
add it accordingly, like that. So actually in India, uh, when your profit goes above say 2 lakhs or something like that, then only you should start paying back tax for the government. So below that,
Yep.
any profit is non-taxable, I think.
Mm-hmm.
So at that point, then it is not. Then it is easier. So similarly, there is some taxable minimum is very low in many countries. So for our $100 and $200, it won't reach into the taxable regime.
Yeah.
So it will be
Yep.
very
Yep.
less amount. So I think it won't be big problem. So when you are investing more money, that time you should consider about tax and which country you are there and that country's tax regulations also.
Yeah. Okay. Thank you, now.
Okay, Harry. Thank you. So, mm, Siddharth Singh. Hi, Siddharth. So for investment in stock market, you require PAN card. Is it compulsory? Yeah, Siddharth. So you need PAN card because you are trading money. So any money transaction should be let know or should be let know to the government. Even in your account, even if you are putting your money in bank, there is some limit. Like if you are putting above, say, I think 40,000 rupees, then you should need a bank PAN card to get withdraw money or deposit money, I think. So like that, when you are investing in stock market, it depends. I mean, they usually start with PAN card as like proof, proof of address and proof of account number. So then, if you are doing so much of money laundry, they will catch you. So that's why they need a PAN account number. So it is must compulsory. Therein PR. So what about mutual funds, SIP, this versus stock? Okay. So mutual stocks, in my opinion, they are like in between, because you put money in mutual investment and mutual investment people will put money in stocks. So they get their profits out of stock market and they give very little profit to you, and they will say that I'm giving you return of say 14%, 15%, etc., etc., but they would have already gained some 200, 300 percentage of interest already from stock. But mutual fund I would recommend for people who don't like stock or who don't want to like risk, like let's say scenario like my father kind of scenario, because he is at above 60 and he would definitely won't would like to take the maximum risk by investing in stock market, and investing in stock is like kind of so much pressure for him. So then at that point, then he will go for mutual fund. Mutual fund is little riskier than a normal bank account, but sometimes even mutual fund also won't give you an expected return. They will say it is subject to the stock prices. So in my recommendation, if you are an youngster and if you are if you can spend some money, put some money in, most of your money in bank because it is safe, and put some good portion of money in stock and then in mutual fund. Hope this answered your question, sir. My second question: how much of time one should invest spend when into stock market? For one might not be full time other job. Yeah. So there is nothing like a minimum time or maximum time, because there are many strategies and many things are like stock market investing. Some say scalping technique, some use crust and trough technique, like they invest in the bottom and then they wait for 1 year or 2 year until they reach a peak. So that kind of taking. So between point 0 to point 10, there are scalpers who will be like they invest in one and then they take it out three. They invest in $4, they take it out at six. and then they invest at 7 and then take it out 9. So it depends on your strategy and depends on the money and it depends on your time availability. So more you study, the more you get what to say profit out of it because the more you will be confident on your investment and the more your choices or your decision will be right.
No, no. The question is, Balki, on the other way. Like this is not per se the duration of the stocks that I invest in the stock market. It is a many a time when I am having another job. Like say, for example, I'm faculty or somebody might be in industry or somewhere else. I will not have time to daily follow only what is happening in the stock. I may not be having an interest or probably interest in a sense. It's not like I don't want to invest, but I will find a kind of excuses of not following it up. But if you recollect, a lot of other people know, like I had one faculty friend, colleague of mine, my next room member in Shastra, who's a very ardent stock market enthusiast. I would say that even between periods or whenever he has a lunch and so on and so forth, he will actually come check and he will go. And that is how I actually started learning itself stock. So my stock market learning came from my neighbor, right? But okay, so it is in that point. Like suppose if I invest in stock market because many are students here, so I'm assuming their primary duty is to study or is to do research or
Do research.
get a degree, right?
Uh,
So
okay,
when we are
so
expected to do that, how much time should I spend in reading about I mean in following up with my stock market? That's what I'm saying. Because
okay, so very
I would rather if you did not get this point, I'll just say like it is not the case
yeah,
with
I got it, I
respect to
got it.
fixed
I got it.
deposit and mutual fund. அதுல ஒரு வாட்டி போட்டேன்னா you don't need to daily watch and all. It's okay. Right.
Correct. Okay, so I got
Yeah.
it. So now, as you all know, I'm pursuing my PhD, and PhD will take a lot of time. Typically, say 14 to 15 hours a day, right? So I don't have much time, but still I do this stock market. So how much? So uh, you can do this depends on the strategy. So let us say you want a very minimum amount of uh, benefit out of it. You can invest in a very stable kind of stocks. Let us, for example, Tata Motors in India. Let us say can invest in Tata Motors or like slow stock markets. For that, you can read for say you can analyze about that particular company or stock, or you can ask for help for some investment companies. So you can ask in your bank also, or some banks even provide that kind of opportunities or some kind of service also like that. I guess in HDFC Bank, they provide this kind of service for investment. So that will take you maximum half an hour or 1 hour or say 3 hours in a week like that. So once you invest, they will do or they will manage your money or they will do the everything and they will get you the benefit out of it just based on your suggestion. How much to invest, where to invest, and how much space to invest. When I was demonstrating, I was showing leverage of 5. So you can, if you do it in the leverage of 1, then you just need to invest and you can just sleep. And then you can come back after 1 year, it would have been grown. But the growth will be like very less. That's the only thing. And that growth also, even it is very much higher when compared to banks. So it is depends upon your strategy. So if you want to make money aggressively, then you have to every day spend say 3 hours, 4 hours. Then if your entire financial is like depends on the stock market and you are going to gain your income from the stock, then you have to work for every day 9 to 5 p.m. Not even 9, from 7. The pre-market starts at 7 or 6 a.m. and then actual market starts at 9 a.m. and then it goes till 4 p.m. and then after post-market goes for another 3 hours. So this entire time you should keep on observing market. But there is something like long term investment strategy also in that you can go for very stable and very good stock markets so that you invest once in a time you can just ask or you can just read few news about that particular company or stock that will take you maybe say depends on your own caliber. So for some people it will take 2 3 hours, for some people it will take few days. So because ultimately you are investing your money, so you should spend some good amount of time, why to spend and how much to spend. Then you invest and you can forget it, then it will grow. So that kind of stocks also exist. So it depends entirely on which stock and how much gain you want. So if you want more gain, you should study and you should spend more time. If you want very less gain, then you can go for like invest and forget, and then you can treat it out. Hope this explains you, sir.
Yeah, thank you.
Then I'll go for Arvind G's
Next
question.
question.
Hi Arvind. So what's your view on Vested? Any other safe means of invest in US, European Union companies? Please suggest to initiate industries to watch out for in near future. I'm new to options. Please advise on how to make safer start. Uh, so I think so. For first question, safe means to invest in US and European Union companies. Right now, US and European Union companies are like in a kind of great turbulence right now. Many even the big shot investors also like kind of breaking their heads because in US one side the corona pandemic is like rising and rising. People are losing hopes on government. On the other side, there is this Trump and Mr. Trump and Mr. Biden is fighting each other. So if Biden is coming, people are hoping for good market and good turnaround because he will be imposing some good health measures and the economy will be back. So it is like every day people are fighting. It is like one side 49 people, other side 51 people, and one side 51 and other side 49 people are there. So it becomes a turbulent market. So right now, I would say if you are investing in US and European Union market, please watch and watch and watch and go for the opportunities. Go only if it is like a best opportunity. Second,
No,
suggest
I
to
was talking about the platforms. I meant the platforms,
plat.
not yeah.
Yeah.
Any
So
platforms I
I
could
I
use to invest in the US and UK
personally I
companies.
personally I use eToro platform, and there are many other platform also. I would recommend eToro because since I'm
Okay,
already
is it
using
legal
it
in
and I
India?
it is there in India also. It is legal in India also. It is actually an Australian-based company,
Mhm.
investment company. I mean, this kind of trading company.
Mhm.
But I think it is legal in. It is legal everywhere. I hope it should be legal in. It gives you options for trading stocks, cryptocurrencies, even currencies also. So I think cryptocurrency is not good for India. I mean, it is illegal in India, I suppose. So maybe you can just check it out. Yes. So I'm new to options. Please advise on how to make safer start. Uh, the safer start will be starting with a virtual account. Go for a virtual account. Then you will understand the market, how it is working. Then you will know which is the safer start for the market and which is the safer limit to start. So this is my answer. Thank you, Arvind. So thank you, Hari. So thanks for coming. Nice meeting you. So Kirtana Krishnan. Uh, Hi Kirtana. So I have one question. Like you said in investment, the longer the duration, the better the returns. Can you share any pro tips on when to sell and come out of the stock? Yeah. So you always have a stop loss. So in my interface, I showed one thing like take profit and stop loss. So you should have some people are always greedy. When the stock price is going up and up, they'll be like thinking, okay, let it go up, I will take the maximum out of it. But you should stop at some point. So you should have like top limit. If it reaches top limit, you should be like ready to pull yourself out. You should say it's okay. This is enough for me. I already gained my enough profit. I should come out. And then you should have a proper stop loss also. So if it hits stop loss, then it is good actually because it saved you from going bankrupt or going zero money. So stop loss always is a friend for you, not a foe. So you should have a stop. So you typically, if let's say the value drops 10%, then I think it will be you better start thinking about selling. So that will be my
Thank you.
Siddharth Singh. Thank you, sir. Srivat sir, can I add something to your answer for Naresh sir's question? Yes, please, Srivat sir.
Hello. So,
Hi,
for
Srivat sir. We could hear you.
both Naren sir's question, I have one relation connecting both questions. So Naren sir had asked mutual funds. One second, let me just read the question again.
Mm.
Yeah, mutual
It's
funds
because of,
versus stock.
yeah, yeah.
So, like you said,
Mm,
the famous quote, never keep your eggs in the same basket. Mutual funds help you
mm,
diversify your portfolio. So, it helps you keep your eggs in many baskets. It can be for a particular industry, but different stocks or across various industries. But one thing which
correct, correct.
I
Yeah, yeah,
know,
yeah. Sorry.
but one thing which I've also seen is if you go deep into it, mutual funds are of two types: debt funds and
Mm,
equity funds. So,
mm,
for the second question is when usually for this I need people to like imagine visualize this as a table. One column should have stocks and bonds. So bonds is nothing but it can be government or corporate undertaking. So assuming it's a government undertaking, if a government wants to build a dam, they will have bonds. So people can invest in this bond, and then they will construct it with that. They do not always use the tax. And from the dam, if they get returns, bonds for a long period of time, like 10 to 15 years, and it's no government bonds are zero risky. We always get dividends all the time. So bonds have been there since 18th century. So that's an ancient form, and it's always worked. So stocks and bonds are in one column. Second column is equity and debt funds. Equity funds are on lieu with the volatility of market, which is stocks. But debt funds invest in bonds. So if people are not very don't want to spend much time invested seeing the market trends and volatility, they can go for debt funds. Basically, when the market is very volatile, bullish or blemish, if it keeps shaking, they can go for debt funds. That's all. What
yeah. You rightly said, Sriyafa. So yeah, it's about the
Yeah.
debt and bonds and these things. It actually becomes very much what to say, complicated, and it may be for me when I started with mutual fund. It became it was like what is this terms? I don't understand. It was like that. So I just wanted to keep it away as much of about stock. I mean, I just wanted to keep myself into the stock region. So you rightly explained about the mutual fund market. So it is good. Thank you. Thanks for your addition.
Srivatsa is actually third year now. So I think I have another stock market person ready to talk. Third year person. Yeah, continue,
Yeah, yeah.
Balki.
Oh, then it's really good, really good. He started it very, very, very early, sir. Because in my third year, I never knew such kind of things exist.
Yes, good. Yeah,
So I'll
carry
go
on.
for Adav's question. So before you started off investing, did you evaluate your choices between stock markets and commodity markets? If so, would like to know decision process. Raghunandan sir. Okay.
That is for the
So
mic. Just no, no. You can leave
yeah.
the.
So there are two markets,
Yeah,
the stock markets and commodity markets. So commodity market something which tells you about the oil, gold, silver, etc., etc. So compared to stock markets, in commodity market, there are like they are kind of twin brothers. So each depends on others in either some other way. Some people say they are not interlinked, but some say they are linked to. So some people even say that US dollar and gold price also is so much linked together. So in a way, if you either invest in stock or like commodity market, more or less, you are what to say, you are investing either in one what to say one brother or the other brother from same family like that. So I thought like commodity market, in my perception, it is like kind of very what to say, little bit riskier because the value of investment needed for a commodity market is quite higher, and the gains or loss you reap out of it is also higher in my personal perception. Like you easily can gain $30 in a day in a commodity with $100 of investment, but in stock you can maximum go for $10 per what is it $5 or $6 per day. So like that commodity markets are. So I just wanted to go ahead with some less riskier and less understandable, so I went for the stock markets than commodity markets. Hope this satisfies Adam. Okay. So thank you, Arvind, for sharing the link. I think many of you can use that link and check it. What are the requirements based on your country where you reside? and what are their this thing. So don't think like it is looking like some kind of fake website. So many people about there are many blogs evolving that the website is fake like that, but they start with a quote like 98 more than 90% people lose money here. That is true because when you trade just like fun, then you lose it. So you should be very serious about it because you are giving your $100 or even your 100 rupees. You just don't give your 100 rupees to your friend just like that. You ask him why he wants or why he what he is going to do or when he is going to return back, how he is going to return back. For 100 rupees loaning to your friend itself, when you ask so much questions, the 100 rupees when you're investing it, you should ask equal number of questions and you should equally think about it whether you should invest or not. Then it is better. Think, learn about it, where you invest and how to invest. Hi Aditya PG. Anna, can you please throw some light about forex trade? Yeah, hi Aditya. So forex trade is something like how much value of currency A with respect to currency B is the forex exchange. So based on the economies, this forex values will be like changing. So for best example will be Indian rupee versus US dollar or British pounds. So for one Indian rupee, we were getting almost 2 to 3 British pounds before the uh, World War One or like before the British. I mean in the British era. So that time Indian economy was so good or better than British economy. So that our Indian value was very high because the bargaining power from Indian money was very much higher. So that's why for 1 rupee of India, you get to 2 to 3 pounds. But later, the British economy grew and grew, but Indian economy, we all know that it became stagnant and it started falling down. It was not that appreciated. So now we are at the point like almost 55, I think for one Britain pound, almost 60 to 70 British pound. I mean, one British pound, we get around 50 to 60, around like that Indian rupees we get. I think so. So like that it is now.
Around
So
96
actually,
rupees, I guess so now,
around
if I'm
96
not wrong.
rupees. Yeah, yeah. Oh, okay.
Yes.
Hmm. So 96 rupees. So that's how bad. So it is actually the forex exchange entirely depends on the country and its economy. So when a country performs very good trade and very good export import, then its dollar value or its currency value will increase. When it is performing poor, then its dollar value or currency value will reduce. So example, India. Nowadays, we are not performing in very good export or import. That's why our value against USD is falling and falling. Earlier, when I was doing trying to apply for GRE, that time it was around 60 to $65, 65 rupees per dollar. Now it is around 70 to 75. So thanks to India and thanks to Narendra Modi. So next we'll move for Anirudh. Yeah. So next move Ariyama Narayanan. Okay. Why do PhD in chemistry when you could have taken up investment banking or computational finances? Yeah. So investment banking. So uh, you should not always depend on forex also because there are many months you will end up with zero money or less money or losses. Moreover, I'm not a full-time financialist or I'm an MBA grad or like someone. So this is just kind of started as my hobby. So my purpose in my life is that if I earn 1,500 or 1,000, $1,000 per month, I should have some other auxiliary investment or some auxiliary source of money also to pay off my rent or some kind of extra money or extra perks or like pocket money. So like that I started, and that's how I started with the investment in stock market. So some people have taken it as a only source of finance also, but it is a really frustrating job, I would say. So it is better you should have some permanent job, and this has a kind of what to say backup system like that. Yeah, it should be like a hobby because you can't have a adrenal rush all time. But adrenal rush for some time every day or like that, it is good. It is healthy. So yeah. So next I'll go for Anirudh Balasubramanian. Hi Anirudh. What would be appropriate asset allocation for people in their early 20s? Okay. In my personal view, I'll go with say 50, 25, 25. or like 60, 20, 20. So 60 you can put it in a bank. I mean, the major portion of it you can put it in a bank, and medium portion of it you can invest in a mutual fund or something like that. And the last few portion you can put it in a share market and you can try. So because this is the best age in between 20 to 30 is that you have very least of financial what to say constraints, because after that you start growing your family and you will get kids and you like your family will be growing and your financial requirements will be very much higher. But that point after 30, when you start investing and when you start looking at trade markets, if you lose it, you only not you will be affected, your entire family will be affected. But now when you are in your 20s, when you are losing some money, it's only you are losing your own pocket money. That's it. So it is not going to do any harm to their close relatives like that. So I think it is the best age, and you can start like 50, 20, 20, 50, 25, 25, or 60, 20, 20. So you can go with any suggestion. If you like more risk, then you can go for 60, 40 also. Thank you again. Thank you, Ado. Thank you, Aditya, and then Sai. Hi, Sai. Thanks a lot, Balki. It was very well researched and informative presentation. I now know what to call when I want to invest in stock. I'm already thinking about it. I already into ELSS and SIP for over a year now. Good to see you doing a great. Thank you, Sai. Thanks a lot. Thanks a lot.
Yeah,
So
Bala,
now,
that was
most
really nicely done. I never knew that you could invest in other countries' markets when you are in a different country. So that was new to me. So thanks, bro. I will
yeah,
definitely
thanks a lot.
contact you a lot for this.
Mhm.
Thank you.
Thank you, man. Thank you. Thank you.
Yeah.
Anytime, happy to help you. Mm.
So,
Okay, sir. So I think
so
questions are
if there
enough.
are
So
no
back to you.
other questions, yeah. So you'll just wait. If there are anybody to ask, you can just unmute and ask. Okay. So Balki, it's a good. That's a long session. It's already 4:15 in
Yeah, yes,
India.
sir. Of course, you can. Yes, sir. It is 7:45. Oh,
Right. So
I
it
think
is
I
good.
took more good
Yeah.
2 hours.
Good. Right. So
Sorry,
good.
sorry.
So,
Again,
so anyway, before I just formally close, anybody wants to give their closing comments for what you have heard from Balki, you are welcome. You can unmute and talk. Uh, or
yeah,
I
guys,
think
you
they
can feel
are
free to talk with me. Yeah.
right. Okay. So I think we will end today's G Meet here. I think this is an entirely a different G Meet. Certainly not what you said in your abstract. It's a very new dimension which we have not heard probably in the 22 G Meets. So the 23rd G Meet has taken the G Meet itself to a very different dimension by itself, and probably this gives I would say to the other alumni also that what and all they can speak. I mean, GMeet as a forum is not only restricted to one certain sect of topic or area. It is primarily what you want to share with an alumni given a forum, right? So in that way also, I think Balki has put the catalyst, and I've told that yes, you can even talk completely something which is very different, right?
Thank you, sir.
Like
Thank you.
right. So that's very nice. I think probably same of your own classmate Ashwin talked on a very different
Mm.
topic that made us all of us wonder that what Ashwin is
He
talking.
inspired me writing that abstract.
Value system.
Check. So that is very nice, and I am sure that people will reap harvest by having a very careful planning and investing their time and effort into the stocks. So thanks a lot, Balki, and thanks a lot to all the people who have joined on a Sunday. Very good afternoon to know how to
Can I add
secure
something, please?
their future very financially. My special just a minute. My special thanks to all the alumni across batches. I just saw the name. I was just looking to the names. Natraj was there. So Natraj is also an MCH student, I think integrated Natraj, right? Or I think 2013 batch. I'm just doubtful with that name. So otherwise, I think I see people from 15, 16, 18, 19, all across all alumni. I think this is one such alumni meet where we have actually alumni across batches hearing you. So that's very nice. Yeah, Balki, go ahead.
So I would like to take this opportunity to thank you first of all, sir. So thank you for providing me this opportunity. Actually, for a long time, our junior Shivani was also asking me to come on take one presentation because we already did once in our class, so we need one more meet. I was telling her, okay, okay, I'll take someday like that. Then I thought like, okay, because people never reveal their secret of success until unless people ask them. So I just was like, okay, let me, if any day some opportunity comes, that time I'll open. So I happened to be like, you asked me, Balki, please take one. Then immediately I said, okay. And then there was like, I don't have to have a second thought which topic I should take because I already know this should be taken because already I have seen a lot of Suryavamsa movies in the previous talk. So I just want to topic or something out of that. So then I went ahead and then thank you really for providing this opportunity. And then thank you all
Right.
60 plus participants for patiently
Yeah.
listening me. So thank you. Thank you.
Right. Good. So I think she could not join because I think she had a night shift. So she texted that
Yeah,
she
yeah, yeah.
would see the recorded video. So thank you all. I'm just ending the recording.